Session 4, Banks' Role and Bullion Market Development, Current Status and the Way Forward. Chairing this session is Mr. Neville Patel from HDFC Bank. And since this session is entirely being led by bank, it's curated for the banks. Our other speakers are all bankers in the house. Mr. Manish Goel would be talking for ICICI Bank. Mr. Harshit Doshi for ICBC Bank. Mr. Manish Gavaskar is here representing he's the head bullion sales, our senior VP treasurer, head bullion sales for RBL. Mr. Kumar Parmani from Yes Bank. So requesting all the bankers taking their place on the stage. Almost feels like a Davos summit to me now with all the bankers here. So ladies and gentlemen, let me tell you a bit about our session chair here. Mr. Neville Patel is the head of bullion at HDFC Bank, a Masters of Management in Management Studies. He's been with bullion industry for 18 years. HDFC Bank is the largest player in bullion in India for bullion as well as jewelry manufacturers. Let me also tell you that each one of our panelists who've been handpicked here have an experience of over 15 years in precious metals divisions of banks, and between them, I guess, they handle at least 80% of gold and silver bullion imports coming into India. So let's give them a round of applause, and I leave this session in the hands of Mr. Neville Patel.
So I think, like the lady mentioned, I think I can easily say that 70 to 80% of the bullion that enters the country probably comes from, we 5-6 banks here. So, the reason we kind of thought we should take this up, right? And we thought as, bankers, we want to kind of have our own panel discussion. I think the thought behind it was that a lot is changing, right? And we as bankers have certain views, certain understandings, certain thoughts. We also have, a vision of where we see the industry going and our role, how it's going to change. So I think our attempt is going to be to kind of conclude this with some kind of takeaways for everybody and a kind of vision that we want to kind of leave you all with. So I'll get right into it, right? So I think one of the things that we as bankers are sometimes accused of is that we do very little, or we are like on a back foot. So I think what we want to do here is, get to the heart of the matter. Is it really true, right? And are we just satisfied with what we are doing today, right? So I think we want to get in the heart of that subject. So what are we doing today? What do we see ourselves doing in the future? And how do we get to that, right? I think that's going to be the framework of our discussion. So I'll get straight to Yes Bank, Kumar. So Kumar Parmani, while the lady said that, 80% of gold that enters into the country is through bullion banks. 80% of the gold bullion that enters the country is through bullion banks. And sometimes there's a thought that's all that we do, right? We're just nominal agencies. So Kumar, my question to you is that all that we do? Secondly, in terms of credit, right? There is sometimes a feeling that we are very conservative. We're very selective. What do you think about that? Is it true? And if you could also, in course of your answer, throw a bit of light on what is it that banks really look at when they're kind of onboarding a customer for a metal, a kind of working capital kind of business. Kumar, over to you.
I have been in the industry for about 20 years. I just got a memento yesterday for that, and I just realized it's been 20 years. So when you say banks are conservative on this industry, I think that is more of a general statement that banks are conservative dealing with gems and jewelry segment or bullion segment. If you actually see the trajectory over the last few years, I can tell you about 3 years. The banking credit to this industry is about 85,000 crore. I was reading somewhere it was 35% growth is what we've seen in the last 3 years. Overall credit, I think, has grown by about 6 to 7%, and gems and jewelry alone has been about 35%. I mean, it obviously, the gems and jewelry sector caters to both domestic market and also the export business. The consumption of gold into jewelry, etc., is all about 30% growth is what we have seen. As banks, I think banks follow the same principle when it comes to credit. They will actually look at largely 3 to 4 key parameters or themes, I would say, where to begin with, they would want to see what is the customer profile, and we'll then also look at what is the client business. I mean, what is this customers, what is the dependency on the customer, on a specific customer. I'm talking about B2B business more of, and then there's also a security structure as to what collateral you're offering. So all these 4 things are the key to the business. One is also so within the working capital limits, we also see as banks, what is the debt versus the equity, what is the maximum permissible banking finance is what we calculate as banks, about 70 to 80% funding is what we, I think in general, the industry is seeing. Apart from the 70 to 80% funding, I think banks are also very, I mean, they also look at the profit margins of a particular client vis-a-vis the industry. So all these factors actually go in and really look at the credit side of it. There are few critical ratios, what debtors receivable, how is the creditors book moving. So all of that put together, I think banks take a conscious call while allowing the credit. And there is no reason, I believe, that the banks deter themselves to go to pass on the credit limits to the customer.
Thank you, Kumar. So I think it's safe to say that banks obviously are expected to be prudent in lending, but there is no kind of blanket, so to say that.
Yeah, there's no blanket.
Yeah, we're very selective in a sense that a good customer, and if the lending really kind of is warrants lending, then banks do lend, right? For us, it's business. Correct. So, I mean, business, well-managed lending activity is what we want to do.
Correct.
So, I think also the fact that we are seeing so much of jewelers coming into the organized space, it kind of helps us to further expand our scope of lending. So I think that is a development.
Lending also, if you see, the granular lending has only increased in the last few years. First, you used to see a lot of customers talking about credit not being available to them. I think that has disappeared now.
Right.
Yeah.
Yeah, I think valid point. So so we move into the other important aspect, which is the focus of the country, which is exports, right? I mean, India clearly has a thrust on exports. So my question here goes to Harshit. Harshit, what is your take on banks' role in exports? Are we really supporting exports, right? And do you think, can you kind of substantiate that what are we really doing enough? And if yes, how do you substantiate that?
So export is a key leg of Indian economy, and within that, if you see gems and jewelry sector's contribution, it's little more than 10%, so which comes to $45 billion, which is a big number. Over the recent past, we have seen that export industry has seen a multiple digit growth, which is more than 30%. So it is also impressive growth. Now, coming back to a point that whether banks are supporting exporters in which way and how it is adding value to the chain. So, banks are definitely playing a very important and pivotal role in facilitating services to the exporters. If you see, banks are serving to all the prominent sectors and service at all the locations in the country. As per my understanding, supply to the exporters by the banks has only grown over the past few years. And when bank is supplying, it's not only giving gold to the exporters, it is giving much more than that. So if you see, bank is giving a bouquet of product. So in that PCFC or LC discounting, so there are many products which are given. And if we see a combine, it's a greater valuation created by the bank. So for a customer, it's much more than the commercial advantage, but it's ease of doing business for the customers with the bank. And one more thing which I've noticed is over the last few years, there are the number of banks supplying to the exporters has grown, which was stagnant for quite a long. So yes, bank is doing a good role in supplying to the exporters.
So, Harshit, the point being that I think recently there was a revamp of policies around IGCR, right? I mean, and bond cancellation and all has been a challenge for us. But how do you think banks performed in a environment which was changing? What is your take on that?
So yeah, that is a tough question. But bank has got brief history with the challenges faced in export sector. So earlier it was compliance related to validation documents which were provided for the exporters. But one thing which is mingling around the bank is bond cancellation, which is a little sticky issue which we are facing. Now, just to give you a brief about it, whenever gold is imported for export purpose, there is a bond which is to be given. Now, this bond is taken as a off-balance sheet in the bank, and there is a capital adequacy ratio which has to be maintained by the bank. So yes, there is a cost involved. Now, when the documents are submitted and bonds are not getting cancelled due to some reason, I'm not going to the reasons. This cost keeps on increasing. And when this cost increases, it becomes very difficult for the bank to, compare to the cost incurred vis-a-vis the services which is provided. So a seamless process in bond cancellation will actually help bank to give much more value-added services to the exporters. Which this is my thought and my understanding. We see the ground moving on. Customs is actually taking efforts, and the things are moving on. But it has to be little more seamless, which will help banks.
So yeah, I agree with you, and I think to our credit, right? I mean, I was a part of it when the new rules were coming, and to our credit, I think we moved pretty fast, right? I mean, some banks took off pretty fast, some took some time, and there was an engagement within banks to kind of figure out what's the right way to proceed. So I think, I mean, to my mind, I think we did very well in supporting the export business because it would have been a break on exports, but I think banks kind of addressed it at the best that they could. Now we come to the all-important question of gold monetization scheme. So we've been often accused that we have done far little in the GMS. Manish, you think what's your take on that? So I've left the controversial question to Manish Goel. Yeah, please Manish, go ahead.
Thanks, Neville, and good evening, everyone. So, gold monetization scheme, if we see, it has been in existence since 1999. It has changed a little bit of shape and form over a period of time, but the fundamental features of the scheme remain the same. If we look at the life of the scheme, when the scheme started, it was a bank scheme. So entire gold deposit was run by banks. And in 2014, it underwent a change that it became a government scheme just like PPF. So the bank only plays a role of a distribution arm for the government, or in this case, a collection arm for the government, where the banks are now playing a role of government franchisee, where we collect and hand it over to the government, and we service the customer. Like PPF, we get interest paid by the government, which we distribute back to the customer. Now, if we look at the scheme in its overall 25 years, right from the beginning till now when we speak, all these years, the scheme has always been a wholesale scheme. And within wholesale, it has been only limited to temple trusts. And by virtue of it being only temple trust, it's been hovering and being managed mostly by public sector banks because of their internal mandate of having deposits being held only with public sector banks. There have been various attempts being made to broad base the scheme and get retail participation, but that has not really met any success. Unlike sovereign gold bond, which has really picked up and it has reached the masses as a probable financial instrument for investment in gold. Now, if we look at the interventions which had been made, one intervention which government made was there was a representation made by us, which is basically the industry, that gold monetization scheme is not working because the interest being paid is very, very low. That time the banks were paying interest of maybe 0.5% to 1%. And the suggestion was that if it is 2% plus, probably we'll get more deposits. So the government reshaped, and that is how it ended up becoming a bank collected gold deposit scheme to a government collected gold deposit scheme. But even that 2.5% of interest has not like enticed any of the retail investors. The second intervention which came was in the form of it was felt at various quarters the banks are not doing enough or not having enough branches. So there was a mandate given that, okay, any bank who is participating should have at least one branch in each state and expand it over a period of time. I feel with all the banks put together, now there are more than 200 branches which are activated for accepting gold deposits across the country. But we don't see still any traction coming in terms of retail participation. The third intervention which was then requested is that probably the banks can join hands with jewelers and probably they can become a collection point. Around that also, there were few guidelines and notifications issued, but that has not really transpired into any kind of a meaningful collaboration between the banks and the industry to take it forward. So I feel a couple of experiments, changes and interventions have been made, but still there is not much of a traction which is coming from retail, and the traction only remains in wholesale. And in wholesale, when we see, as per the latest numbers, approximate numbers, more than 20 tons is the amount which has been collected and it's outstanding as deposits with all the banks put together. And out of that 20 tons, probably 19 tons or 18 tons would be temple trusts, and the balance is private, like basically retail and few of the family trusts which have put their investments into gold, and a few of the funds holding gold. So 2-3 things which is basically food for thought, because over a period of 25 years, various interventions happened. Means we have to give due credit to everyone involved, and what all changes could have been made have been done. Go forward basis, couple of things. Basically, first on the interest rate, does interest rate really matter to a retail investor for him to get converted, or the success of digital gold shows that much more amount of gold can still be collected without paying any interest to the customer? So is it interest rate which is important, or the flexibility of having liquidity at hand and ease of transaction is more important? That is one food of thought which I would want to leave with the audience. Second thing, on the regulation which came around having participation of jewelers to work with banks for collection, nothing material has really progressed on that. So I would again leave the thought, is there something more we banks collectively can do with the industry participants? So we can sit together, discuss, and if there are any further changes required, we can jointly represent and propose to the government, to the RBI, or to the authorities wherever it is required. So I feel these two, basically, one is the structural nature of the scheme, and the second, the joint working of industry and the banks together, I think is the need of the hour.
So I think what one can easily conclude from what Manish is saying is that I think to address GMS, we can't work in silos. So I think banks and trade need to come together and kind of figure how we can really kind of, get this supply chain moving through the domestic route. So I agree with Manish. It needs to be a joint effort. And uh, for us banks, it is an important, theme to address. So we are available individually and together to engage with anybody to, get GMS moving. But we think it's a collective effort. Am I right, Manish?
Yeah.
Yeah. All right. So now going into the bigger development, that is, which is kind of, I think, a great development for India, is the development of the gift. Yeah. So, Manish, what do you think Indian banks can do in gift? I know we do a lot in gift, but what do you think in addition to that Indian banks can do? Your take on that, please.
We have always been speaking about this amongst ourselves. What are banks doing? What is banks' role? And thanks to Srivastav sir for giving us a forum and a platform to put across our views. And I think it's a very good cross process, and it's a very interactive thing where we can put across and hear from you all what do you want to banks to be doing. And this is one thing which we have always spoken about is we want to do more, and one such avenue is the gift. If you see gift, what banks have been doing, as soon as the regulator has given go aheads and every other opportunity that was given to banks, you have seen hedging, you have seen funding on the banking forum to the lenders in the gift exchange. And now with the coming of IIBX, with the clearing option, banks have started doing the PCM part of it. Similarly, the regulator has been speaking to us, we have been speaking to them, and a lot can be done and a lot has to be done. So we really see it's a good opportunity for both banks as well as participants in GIFT. And one avenue is the IIBX, which we see it growing over days and years. And it's a platform where a lot can be done. Like the hedging mechanism is there. You have availability of spot exchange. You have availability of funding being given there. You have qualified jewelers participating there. It's a role for everybody and everyone to be played. And one such participant is a bank, and we are with open arms to do anything that is there into our ambit that is allowable. And we are speaking with the regulator, talking with them, continuously evolving ourselves, and that is what is the need of the hour, I think.
Wonderful. So, easy to say that you're obviously, very bullish about gift. So that's a great thing to hear.
Absolutely.
I think, in addition to what Manish said, I think if you look at the dollar NDF on gift, I think Indian banks are doing a lot, right? So it just kind of exhibits the strength that the banks have. So if we get into something, guided by regulators, we can definitely take it up. And it can really kind of, be a game changer in making, developing the bullion market, right? So yeah, I think, like bankers, I think we're doing a wonderful job when it comes to time. So I think we have 15 minutes to go. So I think we are bankers, right? So we are very time conscious, we are very numbers conscious. So I think we're doing a wonderful job. So now I'll go into a bit of, I would request you not to be bankers, right? Don't be pragmatic, don't be grounded in numbers. Put your, hat of realism aside, and why not share your vision of what you see, bullion banks doing in India. Maybe 1 point or 2 points. And how do you think we'll get there? So getting there, I think I would request you to again put on your banker's hat. But while having a vision, think a bit out of the box if you wish to. Yeah. So whoever would like to go first?
There is lots, but just to make it a beginning point, at least to be allowed to start with having gold accounts, basically gold savings account, gold current accounts, and to build a ecosystem over that.
And how do you think we'll get there? If
I think it has got mentioned. Point has been mentioned in the Niti Aayog report also, and probably like other aspects of Niti Aayog report are getting due attention. I am sure this will also like gets its due place in the eyes of the regulators, and it should happen. I am hopeful.
So adding on to Manish's point is we have been given authority and a responsibility by the regulator, by the government, and that's how we have applied for being an importing bank, and that's among the chosen 16. And there are a few numbers which are really active onto it. So it becomes a responsibility for us as well as banks to be entire ecosystem has to be supported, and which we are doing. So way forward, like Manish said, is evolving into new products. Like in a trading platform, you always see for an arbitrage, you always see for a view, you always see for a technical chart. Similarly, is here where you see an opportunity like a gold savings bank or books, and a lot of these things is moving from a physical to a digital world. Everything is moving from a physical to digital world. I think we have to get to a digital space where it saves a lot of it brings in the sustainability model as well. So that is where I think we should be heading to.
So what you're saying, Manish, basically is that gold account, like both the Manishas kind of agree that gold account is the way forward. So that, which is I think very interesting from various perspectives, right? One is it kind of creates a chain within banks to kind of clear metal if they need to. Customers can accumulate metal, right? And you can also kind of create some amount of what we would say fractional banking, right? Where we kind of hold some stock, we can, while we hold it, we can kind of lend it out like we do for rupee, right? So I think the benefits are immense, I agree. And yeah, I think this is something like Manish Goel mentioned, it's already probably part of Niti Aayog, and it's something that can come up. So it's great to hear that. Yes, Kumar.
So I think when the bank started business, I think it was more of consignment business. So essentially, as a bank, we are in distribution of gold, and I think all the products that are available and are marketable, I would say, is being done by the bank. No matter how the regulations change, when there's a change of regulation or tax regime changes from TDS, TCS, from VAT to GST, I think banks have been more than equipped to really, adapt to the changes. So way forward, I think what I agree with most of the comments made by Manish and Manish Gavaskar and Manish Goel, and I also would advocate on the unallocated accounts, where actually I can be able to borrow from a bank who can give me commercially viable rate, whereas I can buy the gold from a counterparty who can give me a better pricing advantage. So I think all of them can marry each other. And as banks, I think we also have sufficient risk mitigants in place to mitigate all the price risk, the interest rate risk. So as banks, I think the way forward is to be more flexible in the way we do business while keeping the risk intact.
So I totally agree with my fellow colleagues. I'm also of the view that bullion banking is a solution in future, where gold has been the products are saving account, like gold saving account can be offered to the customers. Also, we all bank have got international branches. So why don't we also think from a point of view of sourcing gold from outside and selling it to, bringing it to our country with both the regulation being taken care of. So that is also, it's all my vague idea, but this needs lot of talking with the governments, regulations, RBI and everyone. But this can also be a good idea where gold can be sourced from outside and from our branches outside, and we can bring it to India. So that is also a solution which I feel.
Broadly, we are saying gold account, is something that we see happening, right? And I think if that happens, the role of banks will automatically increase, right? Because you need someone to now manage the gold accounts like we manage a rupee balance sheet, right? You need someone who needs to manage the risk. You need someone who needs to have expertise in bullion bars, right? So I agree. I think it's great to hear that, this is what we all think. Yeah, I think the gold account, what it'll do, it'll put banks in the center of the gold ecosystem. And I think once that happens, you will start seeing that a lot of the, problems around the trade will start getting addressed. So like someone very nicely put it, that if you see, gold is a market of institutions. The more the institutions come in, the better it gets. And the beneficiary of that is everybody in the value chain, everybody in the supply chain. So I don't think banks can actually cannibalize anybody, right? Because what we can do, you can't do. What you can do, we can't do, right? And that's the beauty of business, right? It's aligning your objectives together. So yeah, I think in all we'd like to say that we are pretty excited about the changes that are coming, right? And we want to be a part of it. And I'd like to also share that we as bankers are engaging a lot more, right? And we are discussing matters and we're trying to come up with solutions. And I think that's a very healthy sign, because when change happens when objectives align, right? And I can see that objectives of banks are pretty much aligned. That's what I can clearly see from here. So I think it augurs well for the market, and hopefully, we continue servicing the market. Indian government mint is keen on GMS. How can IBBA and IGM work together on this? Manish, you'd like to take that?
See, the role of refinery in the entire GMS ecosystem is limited to the purifying and casting it into the gold bar and giving it back. So from that point of view, I feel IG Mint, as of I know, they are already working with few of the nationalized banks, and we can also, as private sector banks or as a IBBA, we can see what more we can do with them, and we are open to getting into tie-up with them. Along with that, I feel it's more of a collection points which would play a role in terms of expanding the success of the scheme. So,
Right.
So as far as IG Mint is concerned, we are open. We can work together and see what more can be done.
All right, thank you. So yeah, please.
Yeah, it's not a question,
Yeah,
but it's more a comment. If I may just stand up. Yeah, we have been talking about banks. I don't think there is any problem with the banks personally, because we have now, as a team, we have done several things, including IIBX, and we are seeing what's happening to IIBX. There is a loan guy now who is carrying all this thing, and we know there are problems, obvious problems, which just can't be wished away. Now, coming back to the role of banks in India in bullion, don't you think, this is again a comment, not a question probably, that while all the associations and many institutions are doing a good job, they just don't pass that bar that RBI has to develop confidence in them. By that, what I mean is, while they still use many, things that we give them, etc., I think they are going to be very, they just don't want banks to get into this sourcing problem, because as we see it, they are okay for you to give loans. The gold loans are growing like crazy. We all know that now, and RBI is, encouraging it. But when it comes to sourcing, they're always very careful, because they don't know where the banks will end up. And sourcing is not entirely the bank's problem. It is too many agencies are involved in that. And even IIBX is not able to solve it. Maybe if IIBX completely takes charge of sourcing, maybe RBI will be more comfortable. But that's not happening either. So don't you think till this trust in the institutions locally are enhanced, which is very difficult, or the sourcing is actually completely controlled through an organized institution like IIBX or domestic exchange, whatever it is, we are going to have a problem with the banks, because which committee, which board will approve you buying a gold in the local market from somebody because you just need one loss for the reputation of the bank to go into a trouble, right? I mean, you can't do that, this thing. So do you think it's the elephant in the room in that sense? I mean, do you agree with that comment?
So, Som, I think that's a very, very valid question, and I'm glad you asked that. So the idea of this panel was to address this, right? The way I look at it, it's not. Look, I mean, you're aware. I don't need to tell you, but RBI is obviously one of the better central banks in the world, right? I mean, I don't think the problem is that they don't trust us as institutions. The problem is probably more so in the decision-making process, right? And look, it's like when an individual bank reaches out, right? RBI has to not only look at it from the one bank, but has to look at it from the impact for all other banks, right? And I think that is where the hurdle is. But I think it's come up recently in public domain that IBA has formed a working group on bullion trade, right? Now, typically IBA is a institution where proposals go to the Reserve Bank of India only after they have been deliberated by the working group, goes to the managing committee, which involves very senior people from the banking industry. Once that happens, then it goes to RBI. And I think RBI will take a serious look, something coming from IBA, which has been deliberated by the banks. So I think there is a way forward now. And like I said, I mean, things are falling in place for the change to happen.
Good. Thank you.
Yeah.
Thank you.
Yeah, and
Oh,
just I would like to add to that, Som. Like if we see the import of gold and the bank's role in import of gold, so that is the crux of the point. In the last 10 years, the share of the bank handling import has been constantly shrinking, and my take is that go forward basis it is going to come down further. So is IIBX going to be the gateway of gold entry, or it's going to be only the gateway of bullion entry, which is anyway a shrinking market right now? The second thing is, which again brings us back to that savings account or the gold account. I feel the first structural or the regulatory reform which is needed is disassociate physical gold with non-physical gold or financial gold. So that is where my point is basically to pin it, that RBI should allow the banks to at least have a free hand in handling of non-physical related transactions and non-physical related gold products and everything. Once that comes into play, we see that in overseas market also, we have very vibrant market where banks are at the center of the ecosystem, but they don't touch physical. So that reputational risk and the risk associated with the KYC and AML associated with physical aspect of the business can be mitigated by banks handling the non-physical transactions. So, and in terms of conflict with trade or the trade not, the regulators not being comfortable bank getting into the physical will also get addressed. And my take is that any industry where it gets institutionalized, each and every value chain and the participant of that ecosystem see manifold increase in their business and volume propositions.
Yeah.
Wonderful. Yeah, I think, thank you, Manish. So, yes, I think we are done. So, thank you so much. Thank you, guys. Yeah.
Thank you so much, Mr. Patel. Yes, we are done. And that was the most interesting session, getting a different POV entirely.